What's going on, everyone? Welcome back to another video where we're going to be breaking down the E-mini futures contract. I'm going to go over the larger time frames first. We'll go over our monthly, our weekly, our daily time frame. Then we'll dive into the 30-minute time frame and kind of review what the day did today and how a rare occurrence happened today with a gap. And I'll explain and show you guys that here in a minute. Also, I'll be reviewing kind of my psychological state. It's been a rough couple days. This past week, honestly, has been a rough week. This market's been one tough market to read, especially for somebody who's an amateur like myself, because I'm not a professional by any means. This is just a journey for myself, and then anybody that is willing to learn alongside with me from my mistakes. And hopefully you guys will do better. So let's go ahead and get into it. Before we get into my long rant about what I did today and how I kind of lost control and went on tilt. So right into it. Monthly. Into the monthly time frame. Before we get into it, leave a like, please. All right. Monthly in a balance, right? We've been just kind of chopping around inside of this 5-month balance from 4208.50 to 3788.50, right? We got very close to our balance high so far this month and rejected. And then look at this. Yesterday, if you remember how we closed, we were at or near the previous month's low. We have a great opportunity for either an outside month up or an outside month down. But the way this market has been kind of moving, it seems like we might end with an outside month up, breaking out of this balance. I feel like that is the more likely scenario. Whether that happens, we'll have to, only time will tell. This market doesn't really know what it wants to do, as all three of our time frames are in a balance. Our monthly is in a balance, our weekly is in a balance, and our daily is in a balance. And all that means is we're just chopping around inside of a trading range. Let me move this thing into a default mode and just kind of focus here on how this monthly shaped up. I mean, if you zoom in here, make it more serious. We've taken out last month's high and last month's low. All right. That's something you can't ignore. All right. Whether we take it out to the upside or to the downside, something you cannot ignore. Something significant can occur. This market is boiling and we're just waiting for more market generated information. That's all balance means, is we're just waiting for more market generated information. Now, as far as our weekly goes, I said in earlier this week, in any of the videos this week, that depending on how we closed out, whether we create a new high on the week or create a new low on the week, this would either be stretching the balance. And so far, it looks like that's exactly what we've done, is we've just stretched the balance both to the upside and to the downside. Sellers had a great opportunity to bring this market to the downside, breaking out of balance on our weekly time frame and our daily time frame to the downside, but they just got absolutely rejected at that 40.68, 40.50 area. Didn't want to really push any lower. So far this weekly is in a balance still. We're still just chopping around in this area, and I'm going to remark these areas real quick so we have an updated balance. We closed back inside of last week's range, slightly stretching the balance. So this week's low was 40.62.25. 40.62.25. We'll mark that real quick. And then this week's high was 42.06.25. 42.06. So there's our updated balance from 42.06.25 to 40.62.25. So we're just chopping around inside of this balance. However, if we do take out this weekly high here, which was that monthly balance high of 4208.50, this market will be both breaking out of a weekly balance and it'll be breaking out of a monthly balance. All right. Keep that in mind. All right. Some very, very positive things could be setting up here for the buyers. All right. This market could really get some legs to the upside. Now, I'm not saying that it's unlikely that we come and create new lows on the year, or not on the year, but in this month. But it just seems like right now what the market is trying to do is every pullback so far has just been getting bought up, right? And that just seems to be kind of a trend that we've seen in earlier time before 2020, right? Or all through 2021, where we just kind of had a prevailing bid. Any pullback we had just got bought back up. That's kind of what we're starting to see right now, as every pullback has been bought back up. Now let's look at our daily time frame. Daily time frame. Chopping around inside our weekly balance, right? But now our daily has come back into a balance today. All right, something very significant happened, and our daily came back into a balance. So we had originally taken out the balance low yesterday, came down, tested the 50, and then today we have what is known as an island reversal. So yesterday we gapped down, today we gapped up, leaving this candle down here all by itself. It is an island reversal, and a pretty significant one at that, as it resulted in a pretty large trend. I wouldn't say large, but pretty good push up on the day, leading us up by a pretty good range and testing the 20-day moving average, putting us back into a balance. So now our balance is, we're now back into a 4-day balance. I'm going to call it a 4-day balance. We'll use this balance, this day high right here at 41.7725. So we'll use that daily high as our balance now, 41.77. And if you want to, I mean, you could encompass this whole thing and make it look exactly like your weekly balance. That there's nothing wrong with that, because at some point in time, whichever way this market decides to roll over, the daily will be one time framing up at some point, or one time framing down. Same with the weekly. The weekly will be one time framing up at some point, and it'll all line up, right? Right now, it looks like the likely scenario is that we move up. So if you want to keep your balance at 42.0625 and 40.6225, encompassing this whole range, you know, you're not wrong for that. It's an art, not a science. And for me, I just like to use more recent highs and lows, more recent swing highs and swing lows as my balance areas. So I'm going to use 41.7725 as my daily balance. If we come out of that to the upside, this market, I think, should test the weekly balance high and get moving up. So 41.7725, and then we're going to use this day's low at 40.6225. And like I said, it's an art, not a science. So whichever pleases you, you know. But for me, I'm going to call it a 4-day balance with an island reversal, right? We have a gap. We gapped down, and then we gapped up today. Pretty significant. You don't really see that happen too often. So island reversal, that was a nutty thing, which resulted in a pretty good trend day up today. Now let's go ahead and look at our 30-minute time frame and get into it. You can also witness this on our 30-minute, right? And you can kind of see it a little bit more clearly, right? This was yesterday's range. All this was yesterday's range. You see how it looks like a little bit of an island down here compared to today, right? We gap down, then we gap up. It's all by its lonesome. Nobody likes it. Nobody wants it, right? Let me get my chart adjusted here, and we'll go over what happened today. So after gapping higher today, we go out with a double distribution trend day up. We initially looked like a bit of a P shape early on today for short covering, and then created a distribution late in the day, resulting in a double distribution day. We have 2 sets of single prints that hold to the upside, and you know, I had an opportunity to trade this day really well, right? It was a good trend, classic trend day up. Shorts were covering all day long, providing the bid. There was only one real liquidation break and inventory adjustment, which allowed people to get long. I was maybe being a little too picky whenever we had this pullback in G period. But yeah, it was a tough day for me. And let me just bring up our destinations real quick and just kind of review what happened. So after opening with a gap, right, we opened above the previous day's high, opened with a gap, this low or the up gap got filled, but we now have a new gap, right? So this daily low is now gone. We pushed up into the price probe. That went bye-bye, right? These become upside destinations and targets for algorithms and short-term traders to try to hit. So once we got into the 41.18 to 41.30 range, that was a single print area, right? You usually want to see us backfill into that area and fix that poor structure. And that's exactly what happened in A period as we just continuously drived up into this. B period opens up. Let's see, where did B period open up? B period opened 41.2650. Its low 41.2575. We're gonna call B's low and lowest accepted price. So that's when B opened up, had this slight pullback, and then just rocketed up, filling that set of single prints, and then create a trend day early on. We had a trend day early on in B period, had a set of single prints, and continued to one time frame up as C period took out B's high, right? So as we take out previous time frames high, we're one time framing up, creating higher highs, creating higher lows. And that's exactly what happened. So on pullbacks, you could have been getting long early on in the day, especially after B period had a lowest accepted price and we took out A's low and then started to dip our toe into the upper distribution, right, from this day. Now, this day was a double distribution trend day down, right? We filled that set of single prints. And now what you're looking for as a buyer is to find acceptance in this upper distribution. So if I'm to highlight this whole area here, if I can get it right, please, hello? You're looking for acceptance within this range that I'm highlighting, right? So if you can see that on your screen, that whole range that I just highlighted is what you're looking to find acceptance in. And once B period pushed up into that, you could have seen that that we created single prints, this market was getting pretty strong to the upside, especially after having an island reversal gap to the upside and lowest accepted price and immediately one time framing up. And then C period opening up, driving up, taking out the initial balance high, and almost getting to that 10Y point of control. Now, we've barely missed that 10Y point of control here in C period, pulled back, and kind of just slowly started to see some profit taking in this market, right? But we were starting to find acceptance in the upper distribution. What you did not want to see as a buyer was getting back below D's low here, which was that lower portion of the upper distribution. So you didn't really want to get below 41.30. And, you know, all evening or all afternoon, I was looking for an afternoon pullback low. So as we began to pull back, and F period, or we started to set up in the evening, right? You could have been buying against the set of single prints here. I mean, you could have taken the long, so I'm highlighting, or you could have been taking longs against. So on pullbacks in D period, you could have taken a long to rotate back up to the highs, would have worked out. In E period, you could have taken a long against a set of single prints. It worked out. In F period, not so much, right? We kind of started to fill it a little bit. You could have taken along, gotten paid. But in G period, once we took out F's low, you knew this set of single prints were going to fill. And that's exactly what happened because they filled at A's high. So once they got down and filled into A's high, you knew you were looking for an afternoon pullback low. Now, initially, halfback and value low was right around B's low, which was 41.24. And that's right around where I had my bids in. I initially had my buy order in around A's high at the single print fill, but I was like, you know what? If this market did to start to liquidate a little bit more, I would want to get long at a lower price. But, you know, I definitely should have stuck with my gut telling me to keep my buy order at A's high. So I completely missed this pullback in G period, which bounced immediately after filling and getting just a few points lower than A's high. Immediately bouncing back up, closing near the high, creating a wider point of control here. And then H period, we open up and then just boom, immediately stop the one time framing down and grind toward the high of day. Now, I did get long in H period after taking out G's high because I was like, you know what? Usually if we have an afternoon pullback low, we tend to create new highs on the day. So I got long in H period and had a really good price. I got it filled around 41.35, 41.36. Had really good price. This thing grinded up, and I took them off near the high of day at 41.39 because we began to kind of stall a little bit, right, in H period. And I was also kind of weary about the 20-day moving average looming over our head, and then that Y point of control that we just seemed to not been able to get at the time. But that was a mistake because after I period popped H's high, I was thinking this market really didn't want to go trend. It started to get above the 20-day moving average. I was like, you know what? Maybe reject the 20-day moving average before finding acceptance above it. Maybe we reject, don't go trend, come back to this Y point of control down here where this yellow bar is, right? So I was doing a bit of a mean reversion trade, and that went in my face pretty good. I had initially a 5 lot on, and I think what it was I got emotional for missing this trade down here. I kind of want to make up, and I guess it was a bit of a revenge trade on my part, mean reversion trade, and also a trade that I don't always take, but sometimes do take. I definitely shouldn't do it, especially on a day like today where we had a lowest accepted price and kind of had that reversal in green or in G period early on. I definitely should have been weary of that. So I was getting short around 41.44, 41.46, and then in J period on the grind up, I continued to add on to my position. Got pretty large for me as far as MES goes. Basically, the equivalent of 3 minis is what I was short. Average price was around 41.46, and this market just continued to grind up. I had my stop at 41.52 above the 41.50 area because I was like, you know what? If they get through that 41.50 area, this market can really continue to push up, and that's exactly what they did in K period. They popped. I got stopped out for a pretty hefty loss, and it was a really dumb decision in short. One nuance and one area that I even looked at and told myself, you know what, I can get out of this trade for break even and flip long and reap the benefits of it. But my ego did not allow me to do such a thing. Instead, I ended up taking a much larger loss with higher risk than what my reward was. And it didn't work out. That's what happens when you allow your ego to control you versus your intuition and trusting yourself, right? And knowing yourself. So I definitely could have gotten out of that trade in J period, right around break even early on. And I'll show you that here on our on the 1 minute chart, what I was kind of looking at and how I could have how I was identifying potentially getting out of that trade. So let me try to zoom this in. Oh no, actually, try to zoom this in and then pull up destination so that way you can kind of see the time periods that I was looking at, right? So J period had opened up, and I definitely could have gotten. So initially, whenever we popped back above the 144 in H period, that's where I got long. I could have stayed in the entire grind up and held that. Instead, I got out near the high. I was okay with that trade. Where I went wrong was shorting, trying to fade it to come back in. And, you know, I had an opportunity to take a little bit of profit. It was like a point profit. Didn't want to take it because I wanted to come back in to the 41.36 level and then continue to add on. And then had an opportunity to get out of this trade right in here. So right here when we pulled back to 41.33, I could have gotten out of this trade. I haven't seen that we really weren't pushing down. We had this triple bottom here on the 1 minute chart. And then once we popped back above the 9 EMA, I should have stopped myself out for a very small loss and flipped long, which was the absolute right play. And I should have trusted myself for doing that, to do such a thing by, you know, cutting my losses short and then hopping into the long side. Because after that, this market just continued to grind up, and ride that 9 EMA up to the high of day, 41.63. So had I taken just the initial 2-3 point loss, I could have gained roughly 10, 15, maybe even 20 points to the upside, and that would have made up for the earlier miss in G period on this pullback here, right? That would have made up for getting out of my long position early in H period, and then would have made up for taking the loss here. But instead, I got stupid, got ego driven, shorted on the grind up, and then eventually got stopped out right around the 4150 area. So keep your ego in check is kind of the message here for any of you newer traders. And I do appreciate you guys sticking around to listen to my rant there. So as far as destinations go, let me mark these bad boys for you. I know I ranted there for a fat minute. So that wide point of control went bye-bye. We have a double distribution today, a lowest accepted price. Let's go ahead and mark that. So we have today's high at 4163.25. 4163.25. Our high of day. Cinco de Mayo, by the way. About to mark the upper distribution. It begins at M's low, or the lower portion at 47.50 is the lower portion of the upper distribution. It's where the single prints will start. They will fill at I's high here, which was 45.75. 45.75, single prints will fill there. We have two sets back to back. Because they are back to back, it basically just counts as one larger set. The next set start at J's low at 43.75. So you'll be looking to backfill this area, just kind of like we backfilled this set here. You'll look to backfill this area. And then the lower distribution starts at C's high, 41.75, where the single prints fill, and is the upper portion of the lower distribution, which you want to stay out of as a buyer. Single prints fill. Forgot to label this. Single print start. And then we have an afternoon pullback low of G's low at 27.25. Man, I just cannot. It still irritates me that I missed that long, man. Afternoon pullback low. That is my setup too. That is my setup, and I missed that. And I got the wrong price. 25, not 75. 25. And then we have our lowest accepted price at 25.75. 25.75. Lowest accepted price. And then we have the day's low, which is the bottom of the lower distribution, where the gap starts at 11.50. Low day / gap start 5.23. So the gap starts and the gap fills at 98.25. We'll mark that green now. Gap fill. So there you have it, ladies and gentlemen. There's all of our destinations. So if we open up in the upper distribution, look to take out the high of day at 63.25, grind up to 41.67. Then our daily balance high, 41.77.25. Above that, 41.82. And then above that, nothing until 42.06.25, 42.08.50 monthly high. If we open up below this upper distribution and below these set of single prints, look to trade down into our afternoon pullback low and lowest accepted price at 41.2725, 41.2575 at lowest accepted price, and then into our low of day at 41.1150. That's where you just want to stay out of as a buyer. If we get down there, take out the low of day, then you'll look to backfill this gap, get into 40.9825, and potentially trade into 40.81 11Y point of control. With that being said, I do appreciate you guys sticking around. If you did make it to the end of this video, leave a like if you liked my rant. Thanks again for everyone that does watch. I appreciate the support. Hopefully I'll do better in the future.